Welcome to lesson 8. We're going to be going over trend continuation and what to do if you're in a trade and the trend starts to reverse. So 3 things that we need to keep in mind here are, of course, the trend, which is the overall direction of the market, pullback, retracement, then our entry. Price resumes in our direction or the direction of the trend. So why trend continuation works in Forex is because Forex market moves like a wave. And during pullbacks or retracements, institutions, hedge funds, and just overall big money scale in positions. So what does it mean to scale in a position? Well, like we talked about in our last video, we've got break and retest. If we are already in a trade, for example, let's say we get in on this little pullback right here. We got this break, shifting structure, pullback, get in somewhere right here, give us a good stop loss, and we're looking to go down. We're bearish. We see this minor pullback right here. Well, it can be a little risky sometimes, but on pullbacks, you can enter another position. Something like that. So it's just adding to your position. It's adding another position. I've done this many times. Sometimes it's backfired on me if the trade reverses and I'll take a small loss here. But if if I've got a minimum if I've got a minimum of a, 1-to-1, I typically will put my stops at break even. Just in case the trade does decide to turn around, I'm not taking an unnecessary loss of tens of thousands of dollars. So this is scaling, is putting in a position on a pullback. So institutions and hedge funds will put money into the market and take money out of the market during pullbacks. So here's an example right here. We want to find the trend. As you can see, we are bearish right here on the 4-hour leading up to where we want to enter. We're also bearish on the daily and the weekly up to this point. So we want to be selling, correct? So if I see this right here, see some price action, but we are still bearish because we have not shifted above or below this lower high or this lower low. So we simply retested. We broke below this area of interest. When we're below, we're selling. We retested this area of interest and then caught this move to the downside here. That is following your trend. We knew we were bearish, so we knew we were going to be selling. We got in on a pullback. See how price just pulls back to an area of interest. We saw rejection from this previous structure point. Here's our previous structure point. We rejected it. See that bearish engulfing candlestick? Could have entered right here as well. So let's say that you're flipping an account, right? Flipping an account, you are risking more than you typically do when you are just being consistent, profitable. What I like to do when I'm risking a lot, if I'm trying to flip an account, if I'm trying to do an account flip, what I would do is if I see price during my trade shift structure in my lower time frames, like the 1 hour and 30 minute, and even the 2 hour, I will get out with at least some profit, or just put my stops to break even. Because if price is turning around and you've shifted structure on the 1 hour and the 30 minute and even the 2 hour, more than likely the trade is reversing, is going to come to your break even, and will eventually take you out. So if you want to be more on the cautious side, take this approach. It keeps you from having unnecessary losses that you don't need to have. And honestly, this will keep you profitable, especially through an account flip. There's such thing as a good pullback like this right here that I'm going to put right here. A good pullback is not aggressive, but controlled. And a good pullback does not shift structure. So if this pullback right here came up and above here, see we're bearish, we had our lower high, lower low, market structure, market structure, market structure, market structure. Boom. We actually broke below here, now making this the lower high and this the new lower low. So if price had come up above and closed this area right here, I'm not going to be interested anymore because now this time frame is bullish. Yeah, no sir, do not want that. Wait for your 1 hour engulfing for extra confirmation, then enter either on the pullback or enter off of your 1 hour engulfing candlestick. Now, trend continuation entry. And this is going to consist of break and retest, candlestick entry, trend, stop loss, and take profit. So as you can see, we have our stop loss, our take profit. Our stop loss is in a healthy spot. We are above this previous structure point. Could make it a little higher just to make sure that we are above that little wick right there, so that we give price plenty of room to move. We've got our trend continuation entry. We know that we're going to be selling because we are bearish. Looking for a non-aggressive break and retest. We have the break, then making this our lower high and our lower low. We don't want price to close above this area. Can't see anything that I'm doing here. We don't want price to close above this area because then the 4 hour would shift bullish. So we want a nice pullback to this area of interest. We want it to reject. Could enter off of a 1 hour engulfing candlestick. I went down here in the 1 hour time frame where we would be looking for our entry. Here is that pullback in that 4 hour time frame that we were just looking at. But yeah, so there were three places that you can enter. You can enter off this 1 hour engulfing, the pullback. If you want to wait for extra confirmation, enter off of this engulfing here. So you can enter it here, here, or here, or here. Wait for the candlestick to close though. I hope that this makes sense to you. This break, retest, trading with the trend, entry signals, all of that good stuff. Okay, we're back here on the 4-hour time frame. Got our break and retest of the area of interest. Candlestick entry, engulfing, 1-hour candle. Then our stop loss and take profit. Make sure they are correct and reasonable. So I always want you guys to ask yourself these questions right here. Is there a clear trend? Is this a pullback, not a reversal? Am I at a key level, an area of interest? Do I have confirmation or entry signal and rejection from the previous structure point to enter the trade? And is our risk to reward at a minimum of a 1 to 2? So let me just write those down. Is there a clear trend? Is this a pullback, not a reversal? Remember to wait for candlesticks to close, and you don't want price to shift structure when about to enter. Wait for candlestick to close. Am I at a key level? All that is an area of interest. Is my risk to reward, RR, at least a 1 to 2 RR. I've also got the 1% checklist. I'm not sure if you guys have checked that out. If you haven't, go check it out. It helps. You can print it off. It can help you to get a higher probability setup, make sure you're marking everything correctly, making sure that this is a high quality trade that you are looking to enter. So, yeah, I highly recommend you guys go and check out the 1% checklist. All right, so here's everything that we went through throughout this lesson. We've got our trend, pullback, which is our retracement, our entry when price resumes in our direction or the direction of the trend, which we are trading with the trends, which have no problem with that. And during these pullbacks, which are these retracements, these institutions, hedge funds, and big money are scaling in positions, and you guys can do that as well. It's just a little more risky. Make sure that you have a good pullback and that it's not aggressive, but that it is controlled. And a good pullback does not shift structure. So also during the trade, I don't want any of my lower time frames to shift structure, especially when I'm flipping an account. I'm a lot more cautious because I'm risking larger amounts of capital. We went over our trend continuation entry, break and retest of the area of interest, and our candlestick entry, which is our engulfing 1-hour candle. Make sure that your stop loss and take profits are correct and reasonable. And always ask yourself these 4 questions. Is there a clear trend? Is this a pullback, not a reversal? Am I at a key level, which is an area of interest? And is my risk to reward at least a 1 to 2 risk to reward? That's what we have right here. So I'm gonna put all this on the screen here. so that you guys can screenshot this trend continuation. So trend continuation, that's what we trade in this strategy. That gives us our highest probability trade setup. Now, you can trade against the trend. And we're going to go over that in lesson 9 coming up. So you guys can go ahead and screenshot this, and I will see you in lesson 9.